Good morning. Today we're having a conversation with Paul Makin. And Paul Makin is essentially a digital pioneer with a long history of championing, I'm sorry, we're having a moment with our technology. Thank you. Of championing the underserved and small institutions, which are generally not the first to get the benefits of new technology. Mr. Makin has made a career of trying to change this. We are both from Digital Financial, which is a boutique consultancy of senior financial services experts. We're experienced in the Caribbean and around the world, and we are working together to deliver superior knowledge and value to our clients. We've got our value statement on the bottom there, but more importantly, I would like to say that we really believe that this is a time when digital financial services can help smaller institutions and underserved persons really come into their own within the financial services ecosystem. And credit unions have a key role to play in this. We are very excited to be here because we're aware that credit unions play a major role in the financial stability of the Caribbean region. I am joined by my partner, Peter Castanis, who has a significant experience in the area in financial services in the Caribbean. My introduction to my special friend and associate, Paul Makin, with 30 years of experience across Europe, the Americas, Asia, and Africa. He's an expert in mobile money, mobile wallets, central bank digital currency, and low-cost digital payments for individuals, cooperatives, and small and medium business. He has experience in working with financial institutions, with regulators, with international standard-setting bodies, and on the ground with all persons who are in need of help to achieve financial inclusion. Today, we're just going to have a conversation. It's not particularly a PowerPoint-oriented presentation. What I really want to do is give Paul a chance to talk. We're going to talk about cash and digital payments, the new options in digital, what credit unions can do to take advantage of this moment in time when everything is changing. And we hope that by the end of this, we will have convinced you that the future is inclusive digital payments. So we're going to start with a comparison. And Paul, I've just popped up a chart that you and I have talked about cash and digital. And I'm wondering, would you feel that you could give us a quick rundown, first of all, about why there's still so much cash? And then secondly, about how digital options are starting to become really excellent replacements for cash.
Yes, hi everyone, and thanks for the introduction, Lisa. Before I answer your question, I should introduce perhaps some aspects of what I've been doing recently. My background originally was actually working with mainstream payments, working with Visa and working with American Express. But to be frank, I just felt that anyone can do this. There's far more interesting things to do out there. And I started to look at what we could do with the emerging mobile phones, because I'm talking way back in the year 2000 or thereabouts, how we could actually meet the needs of the underserved, people who the banks and the payment schemes were ignoring. And out of that came a service that some of you might be familiar with, called M-Pesa in Kenya. And that was the first time I was really exposed to the effort that you need to do to make inclusive services appropriate to the people that you are trying to bring in and to serve. Since then, I've worked across principally Africa and South Asia. So I'm currently working in Myanmar, for example, where some of you will be aware there was recently a coup, and we are still trying to work with MFIs and credit unions in Myanmar, trying to help them to serve their customers better. I have a particular passion for the MFI and credit union sector, as I feel that it's underserved itself. Not just the customers are underserved, but the sector is underserved and underappreciated by the wider financial community. With regard to this, one of the things that we're all talking about all the time is how can we drive down on the use of cash? And my response to that is always, well, there's a reason we've had cash for, what, a couple of thousand years at least. It's because it's just so good at doing its job. And if it was bad, we wouldn't use it anymore. So if we are going to replace it with any form of digital payment, anything which is meeting the needs of people, the underserved in particular, then it has to do at least as well as cash, and preferably quite a lot better as well. So on this table here, I just put down a comparison of characteristics of cash versus characteristics of digital. And one of the things that I'd particularly highlight here is the instant settlement, which sounds a little esoteric, but essentially what that means is that if somebody gives me cash, I can immediately spend it again. I'm not, whereas if somebody pays me by some digital means, then so often it's the case that I have to wait for the money to arrive, which can be a day, 2, 3, 4, 5 days before I actually get the money and can spend it again. But some of the new digital alternatives can actually do that. And we have things like UPI in India, faster payments in the UK, and Fast in Singapore. And there are a few others that have appeared, which allow you to do that. But they have disadvantages in terms of inclusion, in that all, certainly except UPI, are not addressing the needs of the underserved. There are disadvantages to cash, of course. One is that you can't actually very easily use it to buy things remotely. I mean, in principle you can, but it's messy and risky, and it's very slow as well, and that nobody will actually send you any goods or provide any services till they actually receive it. Also, it's really easy to steal cash, and it's a lot harder with digital means. And even in the one or two cases where in principle you can steal it, there are ways past that. It's bulky as well. Cash is very bulky. I know that I have a passing familiarity with the criminal world and their use of cash. So one of the standards in how much cash can you use for a particular transaction is how much you can get in a cornflakes packet or a pizza box. That becomes a standard. There's various currencies which are rated according to their pizza box standard. But one thing about cash is that anyone can use it. You don't need a particular technology. You don't need to have a smartphone. You don't need to have a relationship with a bank. Anybody can use it. Whereas in digital payments, often you need a relationship with a bank, and you need to have a technology which can support it, which might be as simple as a smart card, or it might be that you actually need a smartphone. Another thing that strikes me is that cash is very often perceived to be free. Whereas if a shop decides to start accepting merchant payments, digital payments, quite often they have to pay. They pay Visa or MasterCard, or more specifically the bank, something between 0.5%, 1%, 2%, even more % to accept a transaction. Cash is perceived to be free. Of course, there are, in the wider case, it's actually not true, because cash is actually very expensive for a society. You have to have security guards. This is aside from actually printing the banknotes. You have to distribute them. You have to count them. You have to replace the banknotes often. You have to have very large card handling facilities. There's nothing free about cash. It's just that the people who are involved in the transaction don't pay it. So consequently, it's perceived to be free. And I've seen various estimates of this cost of cash. It can be anything from, depending on who you believe, from 0.5% to 1.5% of GDP, or perhaps even more. One of the things that, sorry.
May I interrupt you there? That's really interesting about the cost of cash, because I'm sure when you think about institutions, financial institutions in the Caribbean, especially if you're in something like the Eastern Caribbean Currency Union, and you could have your currency winding up on different islands, and then you have to try to bring it back to a centralized place, that could get crazy expensive. And I'm also thinking tourists coming in, and they come with their money, they're changing their money, and now you've got a currency that you can't spend, and you have to get it to your central bank and exchange it. That sounds like an awful lot of overhead.
Yeah, foreign exchange is a massively profitable sector for the banks as a whole, but it's also a massive headache as well. And I've worked with one bank that, in order to facilitate instant remittances between any two places around the world, actually has funds in accounts in 205 different countries, something like that. And that's a huge liquidity requirement. That bank has to maintain those balances in all these different countries just in order to be able to move money between different countries. There are far better ways of doing it, and we see people like Wise, for example, are coming up with similar ways of doing it, but digitally, and doing it a lot more cheaply. Foreign exchange, in particular, is an area. It's something of a black art. There's no good way of doing it, one of the issues I have is that I'm currently working on a project where we're evaluating business models for foreign exchange using different fintech solutions. But when it comes down to it, when you do the proper analysis, you always end up with a problem with a huge pile of one currency or the other at one end of the route. There's no way around that, and you have to repatriate it in some way, and that includes digital as well as physical cash. The problem doesn't go away.
Right. I'm going to move us through a couple of our slides because you've actually addressed a number of the key questions here. And we were talking about interoperability, and this is a very good story of yours, Paul, about this idea that if you've got a lot of different payment systems working in a region, and people aren't sure whether or not their shop is going to accept their preferred way, what do? They go to a branch, an agent, an ATM, withdraw the cash, and then when they get there, they're likely going to use that cash.
I've come across this happening in a number of countries, and you can understand why it happens. Interoperability is the key issue, and any payment system that's is being proposed now, interoperability should be the driving force. But what's the truly interoperable payment system? Cash. So even in those countries where people want to move to digital payments, quite often you'll find there'll be various bank initiatives. I know of one country, for example, where 3 different banks have launched QR code-based payment systems for merchant shopping. But in order to use them, your merchant has to be banked with the same bank as you. And in a country with 50 odd banks, what are the chances of that? So the net result, of course, is that you end up using cash, because it's just not going to happen. But even in a world of Visa and MasterCard, I know of at least one case where the banks have arranged themselves in groups so that transactions within a particular group are very cheap, very cost effective. But if you go to a merchant who is in a different group to your bank, then it counts as a foreign exchange transaction, and it's massively expensive. So you don't know, even if the shop has a Visa logo in the window, you don't know whether they'll actually accept your card. So instead, of course, you first go to the ATM, you get the cash out, and then you go into the shop and you find out that they do accept your card, but it's too late. You've already got the cash out, so you may as well use it. Sure. It's a ridiculous situation, and this is why interoperability is key. Anyone who thinks they can launch a payment system and therefore they will corner the entire market, all merchants, all customers will use your system, you're kidding yourself. It's never going to be the case. And all that happens is that you fragment the situation and hold back the cause of inclusion and interoperability.
Sure.
So people need to talk to each other and cooperate. Yes, you're not going to make a huge killing on it, but I'll let you into a secret. Nobody makes money on payments in the end. It's not a high margin business.
So we've discussed this idea of instant settlement a bit, and when you and I were working on this presentation, one of the things that you really called out is that offering fast, instant payments to small business is a really wonderful thing for financial institutions to do. The idea that people get paid immediately, that they know the money is out of their account, it simplifies accounting, it simplifies budgeting. And if you have and I know this from being involved in a large retail operation, if it can be a simple, quick payment that happens instantly, I'm going to choose to do that. I'm going to choose to buy from a wholesaler that can let me do that.
Yeah, absolutely. The effect on a small business is quite remarkable, even on a large business. And I worked with one large supermarket chain that was very happily accepting Visa and MasterCard. But when an instant payment scheme came along, they actually switched to using that, or preferring that, to the extent that when they had met to go back a bit, their bank had imposed a requirement that they did a certain number of Visa transactions per month. And they dutifully did that in order to meet the various other commitments they'd made with their bank, the details of which are not important here. But on the day that they met their commitment, they'd done their 1,000-odd Visa transactions. At that point, mysteriously, all the Visa machines stopped working, and a sign went up saying broken. And you had to use an alternative payment. You had to use their instant payment mechanism. And the reason for that was they were paying a fraction of the same amount of the fee. So Visa were charging them, I think it was about 2.5% in that case, and this instant payment system was charging them 0.5%. So that was good. And the banks were only settling with them after 2-3 days, whereas instant settlement, they were getting the money instantly. So they were reusing the money. Whereas before it was taking 2 or 3 days to get the money, they were recycling that money through investing in stock, through investing in their business, through changing their stock, etc. They were doing it, what was previously taking 3 days, they were doing 4 or 5 times a day. So that was improving everything about their business. It was helping them, it was helping the local economy because they were moving more stock through, they weren't running out of stock. They were able to offer a greater variety of products and being more responsive to what people needed. It changes everything. When you move to instant payments, it changes the whole way you do business.
That's exciting. When we get to the end of this, I'd like to discuss what are some of the options for credit unions to get in the instant payment game. Because it sounds like
it's vital for credit unions to, because my career for the last 20 years has been trying to include the underserved. Well, we've reached a point now, after all this, after 20-odd years, where the excluded, in most cases, can now be included. They're included via credit unions, by MFIs, by mobile money operations, whatever it may be. You can get some form of financial service, no matter how excluded you formerly were. But all we've done is put people in small, and this is probably particularly appropriate to the Caribbean, we've put everybody on small islands. So everyone within those small islands, figuratively, can interact with each other, they can send each other money, they can get loans, they can repay them, but there's no connection to the other islands at all. So all these people, I would argue, are fundamentally underserved. They're not able to participate in transactions with government, with anyone on one of the other digital islands. So what we need to be moving towards now is actually providing the link between all of those islands. And that's my focus for the last few years. We're trying to move the underserved to the truly included, so that we can all work together to build the digital economy. So this isn't just about payments. This is about bringing people into the whole digital economy and allowing them to benefit from it and contribute to it.
I'm moving, that's actually That's actually quite inspiring, and it does once again tie right into the credit union's ethos, which is that they are there to serve people that banks may not be appropriate for.
I mean, to be frank, for me, it's not about including credit unions. It's about including credit unions' customers. They're the important people, and I'll work with the credit unions in order to serve their customers, if that makes sense.
No, it certainly does. I've moved us forward, Paul, and I've moved us into this idea of a quick assessment of what's out there. And I think this is very useful, given that a lot of financial institutions, especially smaller ones, can't do everything. So if they're going to choose things that they can do that will give these options to their members and to small business, it would be very good to know sort of what are the options and what are the pros and cons.
Yeah. In terms of what can we do about digital payments, well, these are some of the options that are available now. We have payment cards, but payment cards are essentially for the middle classes. They don't really suit anyone else. You can't regard them as inclusive in any way. There was a move to try and make them inclusive in past years with prepaid cards, etc. But then there's a whole background to why that failed, relating to money laundering and fraud and terrorism, etc. But things have moved on. Mobile money, obviously, I have an endearment for mobile money, having been in at the ground floor when mobile money was being launched. However, I recognize its limitations, interoperability being one of them. You do tend to leave people in one perhaps small area. And again, back to the island idea, living on a small island. QR code payments, it should be interoperable, done properly, but it relies on an instant payment switch underneath. It's a service layered over the top. UPI, I think, is particularly interesting in India. UPI took the whole ecosystem approach. So they provide the instant payment switch, and they put the payment services over the top of that, and they integrated digital ID in it. So this allows a feature that I call Pay Me. So don't pay my bank account, pay me. And where I put my money is up to you, is up to me. It's nothing to do with you. You don't need to know. You can do that through routing through a digital identity service. UPI did it in India, in Nigeria, BVN did it, and the Nigerian government saw immediate benefits. They said that we're going to pay to your identity number, paying all government staff via the identity number, and instantly tens of thousands of ghost stuff disappeared, saving the government a significant amount of money. But no, it's UPI's main weakness is that it's India specific, and it doesn't transplant very easily at all to other environments. CBDCs we've put here, really important technology. Perhaps we should move on to discussing CBDCs a little.
Absolutely, and actually we've got a question in the chat from Trevor Gill asking about would we say that that Dcash from the Eastern Caribbean Central Bank is important to serve the underserved, and that's absolutely on our next slides. Yes.
CBDCs, it's one of the most, well, I'd love to say it's truly innovative, but to be frank, there's nothing new in this world. There really isn't. Various variations on CBDCs I was working on in about year 2000, 1999, in fact, which is a very long time ago. And they failed then because we couldn't really encourage people that there was a real need to move away from cash or payment cards. Things have moved on, and it's more likely that things will perhaps take off this time. In fact, in the Caribbean in particular, it's an important initiative. I think it is important. You either take one of two approaches to the problem of exclusion and how do you bring financial services to everyone. One is essentially break everything up, break everything down and start again. And that's the CBDC approach, it seems to me. The other alternative to that is instead we link together all our little islands. We put shipping services between them, we put railroads between them, bridges between them. We interconnect them all. We create a mesh linking all these islands together. So that's the option that I've been working on for the last few years, and CBDCs is something that lies in my past to some degree. I actually think the future is a combination of the two. CBDCs is really important, but I think its emphasis is likely to be mostly on the middle classes, frankly, and when they need to deal with perhaps somebody with less money, then they will need to revert to one of the other different digital payment options. So I think that this island hopping idea that I'm working on and CBDCs they're not alternatives, they're complementary, they work together. So we need an extra island hop into the world of CBDCs, and that's everything connected together. So we can connect the credit union's customers to the customers of the biggest bank to the holder of the central bank digital currency.
This is an interesting thing when you think about smaller institutions and credit unions, because do you see a possibility for central bank digital currency done well to sort of jumpstart them into digital payments?
Yes. I think digital currencies it's going to be some time before we see much happening, frankly, in terms of total usage. It's really important, but I think that for the moment, the credit unions in particular the smaller credit unions, are going to struggle to deal with anything like that. I don't want to presume anything about the credit unions that are here today at this conference, but in my experience in working with other credit unions, you have some larger ones which are, in terms of technical efficiency and financial efficiency, at least the equal of a large bank. And you have other smaller ones which perhaps struggle a little more, and even in the extreme case, are essentially running their business off one laptop. And there's a spectrum of credit unions from one end to the other. The large credit unions, which are essentially as the equivalent of a bank, they won't struggle with CBDCs at all. They'll be fine. The smaller ones, they really will struggle. So we need to support all. Like I said, we want to be inclusive. We want to make sure that everybody is served so that their customers are served. And that means we need to provide those bridges, those ferries, those railroads to link everyone together.
I'm moving us along a little bit because judging from what you've said, this actually is not the right moment to get into the nitty-gritty of central bank digital currencies, unless there's something on this slide, Paul, that you feel is really appropriate.
No, what I think is really interesting about this, which is probably not readily apparent, is that apart from the central bank, there are no, banks, and I think that's extremely important. This is actually a graphic from the Bank of England when they were doing their study into this, but it applies to most of the CBDC options that I've seen, with the possible exception of South Africa. But essentially, you as a user, you as a customer, register with a payment interface provider, which is broadly a bank. But this is reducing those banks to being an intermediary, and you have to hold that CBDC yourself. And the transactions happen via a central ledger, a cryptocurrency, if you will, which allows those transactions to go ahead seamlessly and very quickly. It's a good model, and it's one I've extolled the virtues of many times myself. I don't think it's necessarily for everyone. as I say, I think there is definitely a role for the foreseeable future for multiple approaches. Going all in on CBDC, I don't think is really valuable at the moment. Inclusion, yeah.
Yes.
Sorry, Lisa, you were going to say.
No, I was going to say I'm moving us on to the topic that you've touched on very many times, and the idea of inclusion. And I'd like to say, can we think about inclusion? Yes, for individuals, also for small entrepreneurs, and then the idea of how do we make sure that smaller financial institutions are included in the greater financial services ecosystem as things move forward into the digital age.
Yeah, I think that everybody tends to talk about financial exclusion or inclusion as a problem in developing countries, and I don't buy that. I think it's very commonplace as well in the industrialized world, and that's because not just payment offerings, but banking services generally are designed by people who tend to think that everyone else is like them. With the best will in the world, a senior banking executive responsible for product development will find it hard to understand the financial ecosystem and the financial needs of a poor person. And so we end up with banks and payment systems which really don't meet the needs of the underserved. So we have a situation in many industrialized countries, for example, where you have to have a bank account to receive some social benefit. But the moment the social benefit hits that account, you take all the money out, revert to cash, because cash is the interoperable means, and also it avoids charges from the bank. And all of the additional payment services that the better off use and benefit from on a daily, monthly basis, they avoid, because getting them wrong incurs penalties, charges. So they just don't use their accounts at all. And you'll hear financial sector regulators saying, well, it's not our fault, we made sure they could have an account, without any consideration being given to the fact that you have to understand people's lives, the ecosystem they live in, before you can actually develop a financial service which actually works for them.
Yeah. And the banks, of course, Paul, they have the policy of, if you don't have an address, I can't give you an account, which is right. not a piece of a requirement for
it's not a requirement. It's not a requirement.
Yeah,
but the banks are for a long time, since 9/11 essentially, have run scared of FATF, the Financial Action Task Force, and what the regulators might do to them if they facilitate a money laundering or terrorist financing or anything like that. And to say they've overreacted, perhaps, is putting it a little mildly. So much so that FATF themselves have actually said to the banks many times over the last 10 years, ease off, guys, you're overdoing it.
Yep.
And they have introduced the idea of the tiered KYC. They introduced that a number of years ago now. And they also said that for the most basic accounts, the tier 1 accounts, you don't need an address. You just need some very, very basic identity documentation, or even, something I'm a particular advocate for, somebody standing for you, somebody saying, yes, that is Paul Makin, and that person having the proper identity documentation. And I don't see why that can't happen. In fact, FATF would agree with me. Having said that, there's one bank that I never thought would do it, but has actually started to do it, which is HSBC. They've started doing opening bank accounts for people without a fixed address. And the
CBDC currencies allow that as well, right? They have a
CBDCs. This was originally one of the reasons for moving to a CBDC. I remember when I first read the documents that Sweden put out for their CBDC before it was even born. One of the reasons was they wanted to go entirely cashless, but they recognized that there were two groups of people who didn't trust banks and people who were homeless who didn't have a bank account, but they would need the CBDC because there was going to be no physical cash. And so they developed the CBDC at that time so that you could carry that value, that money, on a mobile phone or on a smart card, and or you could go to an ATM and download a CBDC onto a smart card, for example. Ever since then, I thought that was an entirely laudable aim, a good way of doing it. I haven't seen much talk of that more recently, and I noticed that Sweden is not necessarily rushing to go cashless.
That's right.
And I think you guys have just gotten onto the idea of identity-based payments. There you are, right? Paying the person, not paying their account, not paying where they live,
That's
not
right.
paying who their employer is, but paying them.
Yeah, that's right. And I touched on this earlier on. The pay me model. I talked about Nigeria. That was a system that was actually done by an organization called NIBS, which is co-owned by the central bank. And they produced a digital identity system which is biometrically secured. And if you have any form of financial services account in Nigeria, you are registered with what's called the bank verification number, BVN. And I talked about the immediate benefits to the government, but that applies to all of business as well. Suddenly, you are able to route payments. It doesn't matter if somebody changes their bank account. It doesn't matter if they move to a mobile money account or move to a credit union account. It's not your business as an employer. Where the money goes is up to the individual. So you give people the ability to configure that, to set it up, and it all just works. Similar happened with UPI in India and the Aadhaar number. Well, again, India did a remarkable job in registering everybody for Aadhaar. And one of the things they got absolutely right was that making sure that everybody was registered. It didn't matter whether you were a citizen or not. If they could meet you in the street in India, you got registered for Aadhaar. And as a result, everyone had an Aadhaar number, and you could link that to a bank account or any other account. And again, it just works.
Paul, does this help credit unions who are not in the formal payment system? So now if they're in a situation where they can't easily accept a digital payment from an employer for one of their members, does this sort of thing saying that now it's going to the identity of the employee, and the employee can then say, hey, I want it to go here or there. Does this help them in this way?
It requires an integration effort between core banking systems. I can certainly talk at length about that because that's currently my core job.
Next session.
Next session. Yes. So we moved.
I moved.
Can you go back a second?
I will.
Can you just go back a second? Yes, I mean it's one of the key inclusionary elements, but it relies on a digital identity infrastructure ultimately, and that can be a formal one like India. It can be a financial sector specific one like Nigeria, or it can be a totally informal one like we have in the UK, where people like to think they are anonymous, but they absolutely are not. You meet any random person in the street in the UK, and within 30 seconds, you know precisely who they are and where they live. There is no anonymity. What's interesting about this in the future is the idea of perhaps the second generation pay me services, where we can use different aliases for payment. Like it might be my mobile number, it might be my name, it might be my identity number. It can be anything. We just call them an alias. And I can hand out different aliases to different people, and they get routed to different places. So that allows me to segregate my personal life, my business life, my family life, whatever it may be.
So my small business, my child who's at university, who I'm doing these sort of payments for, my relationship,
my savings
with
accounts, whatever it might be.
I say, yeah, sure.
Yeah. The other thing that we should really talk about here is the need to link the identity-based payments into the broader financial sector, because the thing that's often omitted when we talk about inclusive payments and inclusive financial services is the question of pensions and insurance, which I think is linked to the long-term health of the economy, the prosperity of a country. Getting that right and making sure that pensions are available to even the poorest people. And believe me, there are pension products which are appropriate. But you have to get the identity question right. And I can wax lyrical about that for an hour or so, but I think it's probably inappropriate right now.
Well, I actually have it on our last slide because I put it in as something that might be important for credit unions going forward.
Yeah, sure.
Authentication. On authentication.
Yeah, authentication. We want to be sure that the person who's actually making a payment, particularly when it's an instant payment, is the person who was registered for that financial service, so that we can link it back to the original registration. Traditionally, that's been done using PINs, of course. We've moved increasingly, certainly in remote payments, by which I mean anything not face-to-face, two-factor authentication. So I'm entering a payment and authorizing a payment on my mobile phone or on my laptop, and then I'm getting a message on my mobile phone to confirm it. Leaving aside the fact that that is totally insecure, it's also completely cumbersome. Biometrics, yeah, that is very effective, but I actually came across the problems with particularly fingerprints and some of the other biometrics during the Ebola crisis in West Africa, where nobody wanted to touch anything. So getting somebody to touch their finger to do a fingerprint scan was not happening. And we had to come up with all sorts of ways to work around that. Obviously, moving to facial biometrics is better, but even facial biometrics has a problem, because very often shops are dark places, particularly in hot climates where the doors might be open, it's really bright sun outside. By comparison, inside it's dark, and getting a facial biometric to work is a real challenge. In fact, just thinking about that brings back nightmares. Just trying to find somebody's face on a picture in a dark shop is almost impossible. So we've been thinking about this idea of ambient authentication, which is you can include in the payment app on your phone, if you have a smartphone, a continuous analysis of what you're doing. So how often you touch Facebook, how often you lift up your phone to make a call, how it feels when you're walking along. All of these things are distinctive biometrics, and so the app is therefore continuously authenticating you. And so you don't actually need to do anything in terms of entering a PIN to make a transaction. Your phone knows it's you because it's been monitoring you for the last 24 hours and nothing has changed. So it just lets the payment go through.
Sure.
And I think that's where we're going to end up in the future.
Okay. Oops.
But all this, yes. Okay.
So I'm moving us along, because we're nearing the end of our time here, to the idea of fresh thinking and options for credit unions. And I really encourage the people who are here at this event to put your questions in the chat. Your questions, your opinions. We're really interested to know how are credit unions in the Caribbean thinking about better serving their members with digital payments. So Paul, I've got up a slide here with this idea. When Digital Financial last year did an event on global modernization of payments and payment systems, one of the things that was clear is that in the Caribbean, there's a real variety of ways that credit unions are connected, and some are in the formal payment systems, some are not. On some islands, there's starting to be talk about coming together in a shared services model to be able to interconnect. I know Jamaica with their ATMs. So can you give some ideas of what are things that credit unions can do to come into the new digital age?
Most of all, work together. Most definitely. Start building up an ecosystem of cooperation. I'm sure you have that already to some degree, but at the financial service and payment level, for example, credit unions taken as a whole, I think are an extremely important contributor to the prosperity of a country. And they should, by cooperating, by interoperating in particular, that allows them to start to flex those muscles and start to be taken more seriously by the conventional financial sector, for example.
So using the options of open loop and closed loop, Paul, there'd be an opportunity, would there not, for the credit unions to come together and say, we're going to create a closed loop just between all the credit unions, a payment system that works for us.
But it doesn't even have to be closed loop. You can let anyone join. Just that you can make it so that we create an open loop payment system, which is, open loop conventionally meant Visa or MasterCard, and closed loop meant something which was just one particular provider. But of course, Visa and MasterCard are not truly open loop because not everyone can accept them. So what you could do is get the credit unions to start to link their core banking systems together in a payments network, in a payments mesh, where if one of you have a merchant, for example, who has an account at a credit union, a loan, certainly, savings, yes, but also a transactional account, then he can link his account, or you can link your back office into a mesh network, so that the merchant can accept a payment from a customer of any other credit union. And a customer could come in, they could use whatever mechanism. If they've got an old mobile phone, it could be USSD. If they've got a new mobile phone, it could be QR codes. Scan the code. The merchant doesn't actually have to do anything. You scan the code, the customer enters the amount they want to pay into the mobile phone. There's a whole lot of cryptography goes on in the background, and then the merchant's mobile phone pings to say they've received the money. And at that point, the merchant can hand the money over. There are ways of linking your core banking systems together cheaply, effectively, and using open source software to allow this to happen. This is available now. This is a service that I'm currently working on in Myanmar, linking the MFIs there together. I'm also looking to use the same technology in Rwanda, linking banks and credit unions together there. And this, to me, is the future. This is linking all those islands together. This is the ferry. This is the railroad. This is the bridge, linking the islands, which are the credit unions, all together.
And it certainly would allow the small merchants that are credit union members to even accept tourist payments with
specifically aimed at those small merchants.
Right.
And other customers of credit unions.
Yep. So
and you could arrange it as well, so that if a Chinese tourist comes in with their Alipay app, they can scan your QR code in a shop and you can do the payment. The technology is out there now. It's open source. It's free to run it up and start connecting people together. You just need perhaps to get somebody to help you to do it, because it's by no means technically trivial, but yes. And this would allow the credit unions to create an interconnected payment system, which would support all of their customers, be they private customers or merchants, and would also be, in my view, of such value that you'd have the banks beating a path to your door to be able to join the switch. Yep. Because we don't have separate economies. We don't have a rich economy and a poor economy. We have one economy, which in this case is the economy of the Caribbean, and everybody in the Caribbean is a participant in it, and we should be trying to link everyone together. And should it be a separate credit union currency? Nope, absolutely not. It should be a fiat currency, because otherwise people have fears of moving into non-standard, non-fiat currencies because they think they won't be able to get out again, or there's costs or whatever it may be. Private currencies have never been a great success.
But Dcash would certainly be easily enabled with QR codes in these
Absolutely. You link into Dcash with one of these bridges I keep talking about. Yes.
Another question there. I see our league has just launched a mobile wallet, but I fear that ambient authentication may not gain traction soon. How can we reach out to the ordinary man who is so tied up in the use of cash?
I agree with you on that. Ambient authentication is something it's a technology that hopefully ordinary people will never even be aware of. Frankly, that's for us payments people to worry about. How can we reach out to the ordinary man who's so tied up to the use of cash? The way that you do it is you look at their daily lives. You look at how they use cash. You make sure that all of the different directions they face in their daily life where they are using cash, that you address that you give them an alternative, a digital alternative. And if somebody is paid, if they're a government employee, or if they're working for a bank, or if anything, if they're employed in some way and they get their salary into an account, a bank account, a credit union account, whatever it may be, then make it easy for them to actually spend that money without cashing out first. Once they've done it a couple of times, you tend to find that unless they absolutely have to, they won't go back to cash. Just going into a shop and being able to scan a QR code and then walk out with the goods without thumbing through cash, etc. You can still stand there, you can still have your chat with the shopkeeper, you can still pass the time of day, but you don't have to fumble around with cash and all the rest of it. The one problem is if a key part of their lives is not supported through digital payments. It might be, I don't know, school fees, or going to the agricultural dealers, or whatever it may be. If they have a need to withdraw a substantial amount of money as cash, then they'll just draw the lot as cash. You'll never get them.
I have another question here by the way, I have someone agreeing with you about facial biometrics and laughing on the point that we did put up on our slide, that with COVID and having a mask on, and doesn't that just cause complications? And then I have a question saying currently in Grenada, the banks have stopped accepting third-party wire transfers. This means credit unions in Grenada will not be able to send and receive wire transfers on behalf of their members. What alternative can be used? Is there a solution out there that they can explore?
Yeah.
I think I need a bit more context to that, to be honest.
But certainly having a credit union payment system that they're all linked together allows the credit unions to participate in remittances, for example. There's no reason why the credit unions cannot be connected together and using one of those open source software platforms accept remittances. Yes.
Stopped accepting third-party wire transfers. Presumably there's a good reason for that, because a bank refusing money is a fairly unusual event.
Roxanne, would you be able to type something more in the chat about your situation? And if not, if you would please send us an email or a note, we'd be very happy to get back to you with some ideas.
Yeah, because we're down to 5 minutes. Yep.
Yeah, the question around third-party wire transfers, this is just another argument for me for interconnecting everyone over a proper instant payment switch, because once that's done, you set up the scheme rules to say that if I send you money, then you receive it, and you have to give it to your customer instantly. That's about the scheme rules, and we have to set it up. You'd have to set it up, well, two things, so that you manage the risk parameters, so that even the smallest credit union can join without feeling that it puts them at too much of a risk. But secondly, so that the large banks, if they choose to join, don't get to dominate the whole thing, don't get to set the rules for everyone else. This is as I say, it's a rules question, ultimately. And
I'm going to, Denise said we can allow Roxanne to share her audio, and this might help with the situation of finding out about the wire transfers. I'm just trying to see if I know how to do this.
Third-party issue is driven by the regulators. Okay, that makes sense. But then we just need to talk to the regulators. I mean, I've spent a lot of time talking to regulators over the last 20 years. They don't scare me. Very happy to advise on that if possible. The regulators usually have a legitimate concern, and if that's the case, then you address that concern.
Yeah.
I just from the text that I see here, I don't know what that concern is, so yeah. I can't really help.
Click the blue audio button to share with the presenters. They're in the chat. They're asking Roxanne to click the blue audio visual button to share with the presenters, and we might be able to hear from her. While we're seeing if that can happen, I'd like to kind of double back very quickly in our last moments. You were talking about essentially enriched financial services and the idea of a good payments, of an interoperable fast payment system to allow this, which I think is very interesting. You were talking about the idea of pensions. I guess there could also be the idea of microinsurance.
Yeah.
There could be the idea of micro investments. Mm-hmm. And these would all be exciting things for credit unions to be able to offer.
Yeah, absolutely. First of all, one thing I'd say with regard to pensions, of all the digital identity systems I've seen, one of the things that always gives me pause for thought is you can identify me now. Will you be able to identify me in 40 years when I choose to claim my pension using the same digital identity system? And quite often that kind of concern gets passed over. So you enroll somebody at age 20, 25, whatever it might be, to pay for a pension, and you may not hear from them again for 40 years, and then they come back and say, I want to claim my pension now. How do you know they're the same person? And I know that pensions in the conventional pension sector, pensions providers have whole departments dedicated to this. But in the digital identity world, I think that there's a lot of thought yet still to be put to this. And in terms of the type of pension I have in mind, well, again, I come back to my point I made earlier about financial services being designed for middle classes. And that's definitely the case for pensions, where you have a monthly payment that you have to make out of your salary, usually when you've just been paid, and it goes to a pensions provider every month without fail. That doesn't work for most people. Day traders, poor people generally, store holders, market traders, etc. Their income is so variable they can't do that. So we need to have pensions that people can put money in whenever they can. So I have a bit of spare money this day, this week, this month, so I put it into the pension. And whatever the amount is, it shouldn't worry the pension provider, provided they're getting some funds in. With one proviso, we need to be taking a complete coherent view of customers in this case. So I want an insurance company to be involved with that pension as well. So when a poor person has a family emergency, perhaps a death in the family, something like that, I don't want them to immediately draw down their pension. I want them to be able to claim on the insurance policy, which is attached to their pension, to make a limited number of claims on that basis over the lifetime of the pension, so that they don't do, which happens so often, clean out their pension in order to meet the needs of a family emergency. So it's a coherent view across the whole financial sector: payments, pensions, insurance, and actually, banks and credit unions as well.
Thank you very much, Paul. We are at the end of our time. There are fascinating questions in the chat. You've really got people talking. I will ask the organizers to share the chat with us, and I have put your email address as well as mine into the chat, so that if people have further questions that they would like to ask, we at Digital Financial would be very interested to talk to them. Paul is joining two veteran Caribbean financial service experts, Errol Gill and Robert Frederick, at 12:30 to talk about shared services, which will include some stuff about payments, but we'll talk about a whole lot of other things that credit unions could do together, either on a league-by-league basis or even in larger groups. Thank you so very much.